Regardless of your level of experience, indicators are something that every traders will always use on their charts. The question that comes to mind then is, what can you do to maximize the information that you are receiving from them? Stay through this video and I will be providing information that will show you exactly how you can use indicators, how I personally use them, and how they can improve the way that you interpret the information that the market is giving you. If you're new to this channel, welcome. My name is Ralph and this is Best Income Answers, and here we talk about the stock market, business strategies, and personal finance. And I would strongly encourage you to go ahead and subscribe to this channel because you're sure to find content that can allow you to make better financial decisions. So thank you very much for your time, and I will see you in the video. So the question now is, what are stock market indicators? So simply put, stock market indicators are simply tools. They are tools that are created using formulas and ratios depending on what you're looking at, and their aim is to give you a visual representation of the price behavior. So they go back over a period of time and they give you a visual representation of what the price has been doing, has it been trending, and such. So having that visual information, you can use that to do a forecast into the future and decide exactly how you want to place your trade and if you're going to be bullish or bearish on a particular stock. Basically, there are tools that are used to support your trading hypothesis. It is important to remember that there are a lot of indicators out there. You can basically divide them, or at least those that are most looked at, into the following categories. First, you would have the momentum indicators. They are indicators that have a lower and upper limit, and usually they oscillate within that value, and they will give you information that will tell you the strength that is behind a trend. So if you have a stock that is trending, and for example, and then you have the RSI, so if you would have a value that is above 70, that would be a strong uptrend, and you have a value that is between, let's say, 55 and 70, so that can look at something that is going into an uptrend. So these are oscillating indicators, and they are the RSI example, RSI, the MACD, and the stochastic indicators. Following that, we also have the trend indicators. These they allow us to visualize the trend. Are we in an uptrend? Then how do we know? Then these will let you know by allowing us to go ahead and visualize how they are moving. But the issue with them is that, well, they are not so effective in sideways market. So because they are being used for trends. If the market is moving sideways and you are using them, so definitely this is not something that you are gonna be able to see. So these include your moving averages and your MACD. And third, you have also your volatility indicators. So these are used to determine how volatile is the market, and these you use them by going over price fluctuations. So these includes your Bollinger Bands, your standard deviation channels, your Keltner channels. And lastly, you have your chart studies. So these are the lines that you would be placing into your chart, your Fibonacci retracement, your trend lines and such. So going over all of that, you can definitely realize that there is a lot that goes into a chart. If you were to put all of this information into a chart, something would go terribly wrong, because there is no way that you could go ahead and understand and use all of the information that is being provided to you at the same time. So how do you use them? What I do personally is, beforehand I decide what am I looking for. Am I looking for a trend? Am I looking to do a swing trade? Am I looking to place some type of investment into a stock, or am I looking to hold for the day, depending on where I suppose that the trend is going? The way that you can interpret indicators are definitely that they give you information into the market directions and price behaviors, and you use them to support your hypothesis. The good thing about them is that if you have 2-3 indicators that are sending you the same signal, this is called congruence factor, so they are all telling you the same thing. So this can further support your hypothesis, or also telling you that your hypothesis is wrong. If you were bullish on a stock and then you have your RSI telling you something is wrong, your MACD is telling you that something is wrong, and everything is go against the hypothesis that you had placed, then you would probably not take that trade because everything is telling you not to do it. But in the same way, if you were bullish on the stock and every indicators that you put on your chart give you that information, you would go ahead and decide to take that trade because they are telling you that you're right. So how do I personally use them? So this is a chart that I have here for uh, Facebook, and this is a 1 hour chart. I'm gonna switch it to a daily chart, and also I'm gonna go over different time frames so that we can see how they behave. But basically what I like to do personally is I like to take at least one indicator from each category. For example, I would take one indicator for the trend, I would take one indicator for the momentum, and I would take another one for the volatility, and also I would have my chart study. So what does that look like? You would get to your studies, and then this is take a swim. Whichever platform that you are using to trade, the information should behave the same because they are the studies, but take a swim is what I use. So this is where I'm going with this. So first you would have your Bollinger Bands for the volatility, and then you do add selected. um I like to use the exponential moving averages, um particularly the 50 and the 10. There is also the RSI that I use, and I use the MACD. So to modify the moving averages, here you have 9. Both of them are 9. So what I do is I change that into 10. I mean the color red. Change this one into 50. Now make it purple. And I like to increase its size so it can stand out. Then you hit apply. Now if you're looking at this, the Bollinger Bands are here, but the issue that I have with them is that it's like too much information into the chart, and it kind of throw me off. So what I like to do is I would go into the Bollinger Bands, and I would modify them. The midline is basically like the 20 moving average, so I'm not using that. I mean, I could leave it. It is still a trend indicator. Actually, I'm gonna leave it there. So the lower band is where I go, and then I change the color to white. I leave the standard deviation to what it is. I change the style to a dotted line. Same thing here for the upper band. Okay, you hit apply, and there you go. So now I can visualize it, so I know that this is the band, these are the bands that the price are moving in between. This is your 50 moving average, and this is the 20, and this is the 10. So how would you interpret that? If you are watching at all of this information, let's take this. So let's take for example, this was during the COVID-19 when it just hit and everything was just selling off, and then you hit this point. So your Bollinger Bands as a volatility indicator told you that this candle here was out of the price range that the stock you usually trades in. So this was really volatile, and then it continued to follow it all the way down with high volatility. So as you are trading on this band and outside of it, so this is trading with high volatility, and then you keep going down, and then you went out of the band, and then you kept going in. So now you would look at your RSI. So So what is it telling you at the same time? The RSI tells you here you have a value that went from 58 here all the way down to 30 on this candle, and then going from there you would expect the stock to rally up. And your MACD, which is also a trend indicator, gives you the same information. There you go. So all of that would confirm. And also your moving averages, you have the short-term moving averages that are crossing each other, and you have all of them like the 10, 20, and the 50. The moving averages that have a low value are below those that have a high value, so this would indicate a downtrend. So you have all of this information here. All of that is telling you that the market is bearish. You have the moving average divergence here. You have the RSI that is below 50, and then you have your MACD that is giving that information over there. So all of that, and also trading from the Bollinger Bands, trading with high volatility. So all of that is telling you is that this market is a bearish market. If you were going along, the idea here would be probably to go short, but since I don't like that, I don't like to take short because of the risks, you would probably just hold until the volatility is over around here, and then you start looking out if the market is picking up. So how would you decide where to go after this? So the market sold off to this point, right? And then you would be looking at your RSI, the MACD, and the volatility. So this is telling you now there is less volatility going into the market. So here you are at this price at 154, and you are above, way above the lower band. So this would indicate most likely that you could go up into a higher volatility level, going upward. And then going up, you have your moving averages. The short term crosses over the long term, which is the 20 in this case here, and then it crosses over the 50. And then as you progress, you have your MACD that is giving you a signal here, because you have the crossover here also. And then this is telling you that this is going positive and up, and you've been going here all of this time. And the RSI also is increasing, and you have all of both of the short-term moving averages crossed over the longest in this case, which is the 50. So all of this as a congruence factor is telling you that the market is bullish. So if you were to take probably a swing trade over here, since you're on the daily chart, so you would most likely wait for this signal. And if you want to wait until the RSI is above 60, which would be around here, but you're on a green, you could wait until the pullback because you are trading with high volatility on the upper band. You do a pullback here onto the 10 moving average, and then you would probably get in around this area here. So this is how you would use that information, all of that. So you would use one of each category, one for the trend, one for the volatility, one for the momentum, and also adding your chart studies in there. So in this case, the momentum would be the RSI that would tell you the strength of the trend, and your trend lines and your trend indicator would be the moving averages as you are having them crossing over. If you don't really know how to interpret the moving averages, I have a video on that. I'm gonna put it on the link below, so you can go ahead and look it up, and this will give you an idea how to interpret the moving averages and how they indicate the trend. The next indicator is the volatility with the Bollinger Bands. I did not put any line on, but if you wanted to put a line, you could put like your support and resistance level. And the thing with this is that it works with every time frame. So this is a 4-hour chart. As you can see here, it is the same, an uptrend if you are looking for it. So this is an entry point. You have all of the information here. There you go. Moving average crossing over here. Bollinger Bands went from high volatility on the upper band, fell down, support on the 10 moving average. You have the RSI over there, and then you have the MACD down below that is giving you that the value is positive and up. So you interpret all of that, and then you make your hypothesis with everything that's happening. Is there any good news, any bad news, market sentiment of that time, the major indices, how are they behaving? So taking all of that into account, if you decide to go long, if it makes sense to you, then you go long, because everything here is telling you to go long. Now, if you are into a long position and you were looking to get out, like for example here, so now this is the current chart of Facebook as it is going now, the most recent one. So if you had gotten here on the long signal, so that would be 266, and you were doing, let's say that you hold it for all that time, but and you're looking out to take a profit as a swing trade. So the way that you would go with this is, if you are looking now, the 10 moving average just crossed over the 20 moving average, and you have the 50 here, and you went from high volatility on the upper band to towards the lower band. So now so this is a signal, this is a bearish signal going here. Also, you have your RSI that is right about your 50, and then you have your MACD that is telling you that you have a negative and down trend. So if you are doing a swing trade and then you are really confident that it could go higher to that, one of the points that you could use is the 50 moving average to see how the price would behave, because now you are approaching the level of the lower band of the Bollinger Bands. So here, this is trading fairly normal. There is no volatility, but going forward, you could see the price following the Bollinger Bands, and then once the price hit, if it keeps going down, that 50 moving average, it could do one of two things. It could either bounce up and then keep on going higher, or it could go lower. So now this is just about you deciding if you're in that move. But all of those signals right here, right now, is telling you that this is a bearish market. So if you had a position, that might be time to go out. And if you are thinking of buying Facebook, you could either wait until the bearish trend is done and then it starts to go bullish, so that you could get a better entry price with your stock. So this is all I had today for how to use the stock indicators. And I really hope that you found this information valuable and that is going to help you with your trade. And I will ask you to please give this video a like and don't forget to subscribe. If you have any questions, anything specific that you'd like for me to go over, you can leave me a comment below. I will go over them and then I will do my best to answer them, or to make a video that can go into details into what you want to see specifically. Thank you very much, and I will see you in the next video.